The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, boys and girls. Welcome to our schoolyard. Anyway, we've had some wild stuff overnight, folks. We had the NASDAQ drop 40 points, then rally 40 points. Right now, it's down just a little bit, but it's incredible volatility that we're having here. We're also having a great deal of volatility in the currency markets. The dollar's under a great deal of pressure. I'm going to post the chart for the euro on an hourly basis. As you can see, we've gone up about 200 pips here in the matter of the last 20 hours or so of trading. So we're up against the 786 retracement of the high that we made way back on May the 22nd. Whether this holds it or not remains to be seen. The probability is it will not. And the reason for that is, if you'll notice these last two bars that we have on the chart, they're very, very wide. They're, more than 50, 60 pips. And usually when you get that, that means that the market's going to, continue on higher. So far, it's stopped right at the 786 number, which was 111.24. But frankly, you have to give it a little bit of time in here because it could easily pop through there. One of the reasons that we heard this morning from the news is that there was a gentleman from one of the banks that said the dollar was basically finished, and that the euro would not see 105 again. Well, that's a possibility, I guess, but we'll have to let history decide that. Right now, the market, to me, still looks, nothing different. We're just having, some really nice rallies. What really surprises me more than anything that I've seen here in the last, last several days is the weakness that we're having in the Treasury bonds, folks. These Treasury bonds, we hit that Gartly pattern on Friday, and these things they've done nothing but just absolute. Let's just put a 15-minute chart here, and you'll be able to see how much these bonds have been dropping, because they have no friends. And this is really contraindicated to a weaker dollar too, because a weaker dollar, people should be wanting bonds because we're getting a high interest rate here, because with bonds going higher, that means your interest rate is higher, so people would want a demand for those, which are U.S. bonds, and so you would have to think that would be it. Now, that's one of the reasons why I don't try to think too much doing this stuff, because I don't understand a lot of the things that go on, economically, and here I've got a degree in economics and an MBA in finance, but it just doesn't make a whole lot of sense right now. What we are doing is we are making a small ABCD pattern here over the last several days here in bonds, and we should be getting pretty close to a place where we're going to rally. The rallies have just over the last it's another full point down almost, where we have this ABC coming in here in the bonds. So I would just, hang on there. These look incredibly bearish, folks. Whenever you have a Gartly pattern, give me 1 second here. I wanted to put this up so we can take a quick look at it. Where is it here? Yeah, there we go. Whenever you have a Gartly pattern that feels like the one we had Friday, we went right up to this 107 and change level when we were on the air. That was Monday. And here we are. What is today? Tuesday? Wow, just in 2 days, these things have dropped 4.5 points. I do not remember in recent memory where we've had a drop in bonds like we've had with a rally in stocks. I cannot remember the last time that's happened. I'm sure it's happened, but I don't remember the last time that it's happened. It was really amazing. The stocks could, rally 150 Dow points from low to high, and last night the Dow rallied 100 points without even making any change at all. So these are really active markets, which we're supposed to be seeing because we still have Mercury retrograde for a couple more weeks. And that usually means the decisions to go long and short, or buying and selling, or getting insurance or not getting insurance. Usually those decisions are probably wrong, if you try to do those. At least that's what the Mercury thing usually means. Now we're going to have Rich Anderson on at the break to talk a little bit about wheat and, of course, soybeans. The soybeans are still above that level at 903 that we looked at, but I'm frankly waiting for a rally up, and then I'm going to buy the first pullback. I just want to wait and see what happens. I bought the beans at 903. I got out of the beans at 903. They're trading a little bit higher than that right now, but my game plan was they were to really take off from that level on May 26th, and they did not do that. And so since it did not do what I wanted to do, I didn't want to play. And that's one of the advantage of speculation, is that you don't have to stand in front of these freight trains if you don't want to. That's the main thing of what we're looking at here. So we still have these Treasury bonds look like we're ready to have some type of bottom about a point or so lower, but I would not get too excited about it as of yet. Another market that looks interesting from the possibility of the short side is crude oil, because we did come down. We got down to unchanged on the day. We're still up a little bit, but as long as we don't get above 61.50, I think we've got a chance in crude oil to possibly be making a top in here. The reason for that is we're seeing some divergence between gasoline, which is the leader of the pack, and the crude oil. So that could be a possibility of something like that occurring. I wanted to answer a question about IBM. I don't know too much about it, but I will put this IBM chart up. We had a huge gap in it a long time ago. I haven't even seen the chart in quite a while, but we'll take a look at it here. Oh, it went right up to the, this is still in a downtrend. I didn't even notice this. Yeah, this is, hold on just a second. Yeah, this is pretty interesting. Well, if you like technical analysis, you're going to have to like IBM, because this has got all the things that you could possibly ask for in a stock. You're in a bit of a downtrend since March of 2013. The rallies that we had in January through March was exactly the same as the rally that we had between January and April of this year. Each of those rallies went from went $27 a share. The rally in January of 2014, and $27 a share in the market here in exactly $27 a share during January of 2015 till we made our high on May the 2nd. So that's what it looks like with IBM. Long term on IBM, let's just put the long term weekly up. We've completed a big bullish Gartly down there at that 150 level that we did talk about it, because I still got the data on the machine. And as you can see, the last ABCD leg was exactly equal to the BC leg that we have going now. That tells us that we're most probably going to see, let's just put this overlay it, and you're going to see sometime in the next 6 or 8 months, you're going to probably see IBM down the 133 level, because it's just going to repeat the last swing that it did. If it gets above 178, then you're probably wrong, or I will be wrong, but I'm not in this, but I'm just showing the technical part of it. But it's a good technical stock. As you can see, if you look at that long-term weekly, there's a beautiful 3-drive pattern right at the high, perfectly symmetrical, coming in at the $200 and some dollars, $213 a share, and then we started the move down. So that's what it looks like for IBM. So we'll see if that's going to have any bearing on any of these things that we're looking at so far. By the way, someone asked the price of the oh, we've got another currency we could have to pay attention to here. Hold on, folks. My alerts just went off. Give me a second here. I want to put these up here and let you take a look at it, because we're having an alert here in bonds. We really like this bond trade that we were looking at here the other day, and we just made a 61% retracement, 50% from April 13th, and 78% retracement from the low on May the 2nd, and now we're having a pretty nice move. We're up 100 and some pips on that from the bottom, which is really a pretty good sign. I'll cover gold and silver after we get to our break here, because they're still trying to hold. I mean, silver had a big sell-off yesterday, as did gold, about $18. and we're rallying back a little bit in both gold and silver right now, but nothing of a spectacular nature. But this Treasury buy, the British pound, does look like it has a chance that it wants to go to the next level here, which would be up around the 150, 450 level. So this is another one that we have following along here. Let's just see how we're doing here with the euro. Went screaming through. There we go. I wanted to show you the reason why you wait for these long bars, boys and girls. This is got to love this. That's one of the smartest things I ever did, is to respect long-ranging bars. You can see the market now went through that 111.14 level by about 50 pips. So there must have been some type of a news announcement, or just everybody wanting to pile on, because now, you know, we're really screaming here in the euro. We're up over 100 and some pips, and whenever you get that happening, you're going to have to go back and look at a little bit longer time frame. So let's just do that right now. I've got to do this work because I'm on the air, but I have to do this for myself because I happen to be long the euro, and I'm looking for a place to get out, and I just want to take a little bit of time to look at where we are, and we're almost at the 61% retracement from the high in mid-May. Let me put that up here because I think you got to see this. I've got to do this work anyway, so you get a chance to see someone make a fool of himself, and that might be me. Hold on just a second. But we're going to be exiting this stuff here very shortly here. It's well, it's up about another 60 pips from where we are right now, but let's just put this up here and take a look at it. And it's one good thing about trading foreign exchange is that you can move your stops up so quickly and use trailing stops, and it makes it real easy to look at. Well, we went blasting through. The key for us was when it went blasting through the 106.65 level about an hour ago, and then we went through the 786 about 5 minutes ago, since we've been on the air. And now we're approaching the 61% retracement up at that 112 area. Now, long term, you know, all this is just a bear market rally, in my opinion. I know it's really excited, but we've had these before. Look at the rally we had up at the 114.60. What did it do? It went all the way down to 108.20. So just because you have these rallies doesn't mean that they're going to go straight up. So this is a key level that we'll be watching here in the euro at that 112 level. It gets above 112. Then you got to say, oh, it's going to be a little bit more challenging, you know, with this. So we'll just watch this to see how it's going to unfold. The interesting one to watch will be how the stock market handles the selling, because notice we had this big run. Let's just put the E-mini up here, and you'll be able to see it here. But the stocks will be opening here in about 15, 20 minutes, and they're still down on the day. If you look up at the overnight markets, you'll see that they're down quite a bit. And the one chart that I have to show you, well, I'm going to have to do it at the break, but we're going to go through the most important chart of all when we get back.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and the next chart that I'm going to post is from our guest for tomorrow, and that will be Ed Carlson from the Market Technicians Association out of Seattle. Ed has written that book about George Lindsay, but he furnishes me the advanced decline line for the New York Stock Exchange. And if you'll notice that we've been in a downtrend since April 27th, even though stocks have gone higher several times, the advanced decline line, especially in the last couple of weeks, you can notice that it's really started to roll over. And the question that I've asked myself is, if the stocks are rallying with the advanced decline line dropping like this, what will happen if stocks really start to drop? In other words, what this chart is telling me is people are selling, and there are people there to buy, but what happens if this buying dries up and the selling continues? That's where you have these really wild days. And we haven't had a really wild day in the Dow Jones for a very, very long time. I imagine like I've said several times, that you're going to see a 700-point move without any trouble at all, because it'll be 1.618 of the last big move we had, and so that's what I would be watching for at any time. So what I'd like to be looking at here is the volatility that we're having in the currency markets can sometimes be a precursor of things that are happening with the with the stocks themselves, and that's going to be a real interesting concept, because we're going to be opening here pretty soon. So far, we've held the bottoms from the overnight low. Whether that's going to be the case or not, we'll have to wait and see. But the volatility in the currency that we're having is really quite it's an outlier event. Whenever you see the euro move several hundred pips like it has, it just means please let me in the market, and they're willing to buy at any price. And the pip spreads, for one thing, were telling you that something was certainly amiss in the market, because the pip spreads usually are 1 to 2 pips at the most. And when you start seeing the pip spreads move 5, 6, 8, sometimes 10 pips between trades, that's really scary. Now, I know that's a compilation of the various of the 13 major Forex banks, but that's still an outlier event, because when you watch it, we get the average of that. When that means that average is moving out that far, then that's telling you that you've got something really, really significant happening. So let's, kind of watch that. Whether it's going to mean anything or not, I'm not really sure. Maybe the market's going to settle down and hold here and then, start to go higher. Usually when you have a lower opening like we're going to get here in about 3 or 4 minutes, people will buy that lower opening. The question is, if they buy it in a lower opening and then a few minutes later it starts to go down, that just increases the selling. So this will be an interesting phenomenon to watch here in the opening of the market when we open here at 9:30. And then after the break, we will have Rich Anderson on of Anderson Capital Management, where we want to talk about some grains, particularly soybeans, wheat, and corn. And we'll do that when we visit with Rich. If you have any questions, it's 877-927-6648. I'll be happy to answer the question. And if I don't have the answer, I'll certainly ask Tom O'Brien, because I know he'll have the answer. But we'll be watching this closely today for the stocks, because it's going to be quite volatile. But not only that, but we're over the full moon day, so you could get a high or low in here. Maybe we've seen the high, maybe we've seen the low. I don't know, because with this kind of volatility, that tells you that there's something really big happening, and you want to be able to determine what's going to happen, and we probably will after the first hour. If we're lower quite a bit after the first hour, we're probably going to have a big down day. And if we're higher after the first hour, my assumption is the bottom is in and we could have another run. We stopped exactly at the 786 retracement yesterday in the New York Stock Exchange Index to the exact tick, spot on. Now, whether that'll break that this morning or not, we'll have to wait and see. But that's pretty much what it did. So that tells us that there's pretty good support at that level. The $64 question is it going to be able to turn around and, continue to go higher from this level? With this advanced decline line as bearish as it is, then that's pretty negative. Now, the question is, what happens if the advanced decline line starts to increase? That means the market will go higher, because there's people more willing to buy stocks on upticks than there are selling it. So that means the market will go higher. So that's why I watch that advanced decline line. And usually if you're going to have a day where you've got 4 or 5 to 1 advancing volume over declining volume, you know that something has really turned, but we have not seen that. It's all been selling here, for the last several weeks that we've done this. So it's an interesting phenomenon that we come into with today's show, because of the fact that we're going to be ringing the bell here in just a minute. At the break, we'll see where everything's trading by the time we get back, and then we'll have Rich Anderson on.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're still going up and down, and the stocks and bonds keep going lower. We're going to have Rich Anderson on, but he just let me know that he is just swamped with all these wild swings that we're having. And so I certainly can understand that, you know, where we're coming from. So it's interesting that we've rallied 30 cents in wheat in the matter of just a day and a half, if that. We had a beautiful pattern in the wheat. Oh, just a second. I've got to do something here. That didn't work the way I wanted it to. There we go. There we go. Oh, hold it. We got Rich. You're on the line.
Can you hear me?
Yes, sir. Thanks for coming in, pal. I know it's crazy out there today, but what do you think's going on with all these currency moves and the things that are jumping around? You got any opinions?
Well, first of all, you called the wheat perfectly, you know, over the weekend. And it's all about short covering. These markets are all heavily short. And so the funds bought over 7,000 contracts a week yesterday. And, you know, ones that got above 480, it was just up and away. Mm-hmm. Now, this has happened 4 times since March, that the market gets a little too overdone on one side, on the short side, and they have these popcorn rallies where they shake all the funds out. Not unlike silver yesterday. I don't know if you noticed, but silver had almost a 60-cent rally in break, you know. The corn is heavily short, too, and it's being dragged up by the wheat. The difference with the corn is there's a lot of corn in the farmer's hands, and so it's harder for them to move very much. But keep in mind, the world wheat market is 40 to 50 cents cheaper than where the U.S. wheat market is. There was some freeze in Canada and northern North Dakota, and that helped as a catalyst to get this wheat rally going. But, I don't think it's the real deal. Normally, you've got to wait until the end of June after you're done with the first part of harvest before you get a serious rally attempt. This is just all short covering. But keep in mind, I mean, that's what's going on. Yeah, the markets are thin.
Yeah,
Silver's a perfect example yesterday.
Yeah, I was shocked to see silver do what it did, Rich, because of the fact that I'm going to put up the chart for soybeans here, so because someone's had a question. We've now had a 15-cent rally, actually 18-cent rally off the bottom. And my game plan is to, oh dear, Rich, all of my alerts are going off at once. Hold on a second here. Oh, the S&P is making new lows. That's why. Let me turn this crazy man off. And
the S&P is that's in a rising wedge, and those rising wedges very often, probably 75, 80% of the time, precede a change in trend to the downside. They don't have to, but that's the preponderance as to its slowing momentum and a failure.
Okay, now regarding the corn, what is your feeling? Let's do beans first here, Rich. Just because I've had several people ask me about the beans. I'm going to put the beans up, and we've gone from 8.96 and we're trading around 9.15 right now. So we rallied about 20 cents a bushel, which isn't a whole lot, but at least it's the first rally. Now my game plan, Rich, is I'm going to buy the retracement when we get this over the next several days. This happens to be a 5-minute chart just showing the wild volatility. So I'll be looking to buy the beans back where I got out of them at around 9.03. And if I do that, then I know I still have a 10-cent profit potential in them as opposed to, a 10-cent risk with a greater degree. Now, would you agree buying them on a pullback here would be the better way to do it as opposed to buying a breakout?
You're talking November beans?
Yeah, November beans. Yeah.
Yeah. I think the this rally we're getting right now is being dragged up by the wheat. And as I just got on saying, I don't think the wheat rally is a real deal just quite yet. So I'd be buying a dip on the beans. I'd like to see them close above yesterday's highs today, close above 910, and then be a buyer. 62% correction. Figuring they're going to hold this 903, 904. You just get too many people short, and so then there's nobody left to sell. Mm-hmm. That's what's going on.
How about the cattle market, Rich? What's your feeling in cattle?
Well, my favorite is to buy not unlike the beans, to buy a dip in the August feeders back towards 221, 220. That was kind of a breakout area. Look to see maybe the August feeders go up into that 230 area with all the rain we've had. There's good demand for the cash feeders, and they put them back in the pasture, which is where you get your cheapest gain. And so they'll in order for the feedlots to buy cattle, they have to pay up. And in the north, they're paying up $8-10 a pound more than they are in the south because the corn's cheaper than it is in the south. But that'll all eventually come together. And so I'm thinking the August feeders maybe have 230 on them. I think 156 on the June cattle. I think higher. I'm buying dips for the moment.
Okay. You still think we got a chance? We have a chance for some of these grains to rally during the season?
Well, so far it's been a cool, start of the season. There's no heat in the forecast. We're going to need some heat to come in. That hasn't shown up yet. We need some kind of a high pressure ridge blocking starting to develop. But there's nothing going out to June 16th. Typically it'll start around the 4th of July. We'll see.
Okay.
It's kind of like new moon, full moon.
Yeah,
those things happen. It's just time.
We're really stressed to do this today, but thanks for giving us this 10 minutes, and maybe next week we'll have you on again for a few minutes. How's that?
All right, sounds good. Thanks, Larry.
Thanks, buddy.
Bye-bye.
Appreciate it. You bet. That was Rich Anderson of Anderson Capital Management. He gave us 10 minutes of his time, which is the most valuable during the opening. Of course, he happens to be on the right side of some of these markets, especially the bond market and a couple other things, but and also the euro. I happen to know that, but we started selling the first 20 minutes right out of the box. We've come down. We've taken out the overnight lows in the S&P. Now there should be some pretty strong support at 2086. In the S&P. Let me pull this up. I'll just give you an idea. I'll get the hourly chart up here. This is what our first indication might be. You'll give me a second, and I will show you that the 61% retracement of the low we made back on May 7th comes in at 2087, and that would also be a Gartly pattern forming at that time. And if this happens in the first hour or so, we're only 10 points away, and since we're swinging 20 points at a time, that would be easy to see that we could make this potential bottom here in the S&P. But remember, that advanced decline line, folks, that is not a very good line for the bulls in the stock market. This market has got a situation where it is really really turned very bearish. I mean, just the fact that every time the market rallies, more selling comes in, and that's usually not a good sign. Well, especially if you're long. So we'll keep an eye on that to see what's going on. Now, there's one other one that I'm on. I was fortunate enough to take a look at that, and that is this crude oil here, because we made minutes ago, we made this higher high by just a heartbeat, and then the market turned around and has now come back down on the day. That tells me that there's some really strong selling coming into the oil market. So I'm looking for a place to potentially, get short the oil market. So we'll watch this one too as we go through the shows this week. For a $7 or $8 rally, a sell-off to the downside, and then we'll be able to see what's happening. These openings are they're really quite dramatic nowadays, and I'm trying to do the show at the same time to possibly get my mind cleared up. But boy, when I've got too many things going on to see what's going on, it gets really, really frustrating. And then I get messages, from people asking questions, and then I got to be really careful because I got to focus on 2 or 3 things at once. So thank God the market takes stops in. Just that last 45 minutes, you really have to be really, really prepared, to do this. So by the way, I don't know what that means. Someone's asking me a question, and I don't know what the question is, so I'll just not worry about it. Oh, take a break. Yeah, I think I'll take a break. I don't know if we have a break coming up or not, but we'll have to wait and see. Let me quickly review what's going on. We've still got the stocks down near the lows on the day. They're down quite a bit, and we've got just about a sea of red everywhere. Hold on. And there's not much up on the day with the exception of the wheat. The wheat and beans and corn are having pretty good rallies, but the rest of the things are under a pretty good correction, So we'll see. This is the fun time of the day. Usually I'm done by 11 o'clock in the morning, and on days when you happen to be lucky on some of these things, but it makes it a little better. The bond market really shocked me. I mean, I was short, and it still shocked me, and it really, in fact, we haven't had a rally. I just went over the last 20 hours or so of trading in bonds. We haven't had more than a 20-tick rally in bonds since the market made its high up at 157 and change on Monday. Was that Friday? It was Friday, excuse me. It was Friday. And if you notice Friday's action, in the last hour of trading in Treasury bonds, with about 20 minutes to go, the bonds were trading at 157.05. That's where I had sold them. And I happened to go out to pick up my little grandson. And when I came back 20 minutes later, they had dropped a full point. And they've been dropping been dropping ever since. I mean, it's just and that's I know for someone that wants to sell, a big player, someone's asking the question, it's a big player out there dumping it. A big player is selling it on the way up, folks. I really believe that. I used to see that on the floor of the Merc all the time. There was a guy there named Bill Shepard, the greatest trader that the Merc has ever had, I believe. I have to tell you this story. I traded and mine was 2 sheets of paper, and I'm on the elevator one day with Reggie. He was the guy that delivered the equity runs to all the traders that traded through Lynn Waldock, and he was holding one that was about 7 inches thick. And I said, boy, you got to do a lot of deliveries today. Reggie, are you kidding me? He said, no, that's one trader. I said, Reggie, I'll give you $50 if I could read that for an hour. He said, for $50, I will go up and make a copy, and you can keep this one, but don't tell me about it. And I went over and looked at these runs of what this guy had on, and he was short British pounds from 550. I mean, he had like $30 million in open profits. 10 years later, I'm on a panel with him in New York, and I'd known him for quite a while, and I told him the story, and he laughed, and he said, Larry, he said, that happened all the time, and he said, that's one of the reasons I bought my own clearing firm. He said, I just don't like people knowing what I'm doing, and I said, yeah, I appreciated that. And I said, I never told anybody about that, but I did mention to him, but he was a real player. And those guys sell on the way up, believe me, because when they're done selling, there ain't anybody left buying. That much I can tell you. At least that's how I feel it anyway. If you ever read a book about that, Bernard Baruch's My Own Story, he was one of the greatest speculators of all time, a personal friend of J.P. Morgan and FDR and a whole bunch of other people. But he's a really smart cookie, and he's the guy that said, don't be concerned on the return on your money. Be concerned on the return of your money. So even though the interest rate seems high, you got to be careful with this. But this wildness that we're having in some of this market is really quite good, because that means there's something big happening. Right now, then you're probably going to get some really big move somewhere, I would think. So we'll have to wait and see. I think we got a break coming up here pretty quick, and then we'll see where we are, and we'll get the someone keeps asking me questions, and I don't know what they are. Maybe no one can hear me. No, well, I don't know what to do. Okay. All right. Say we've rallied. Let me see. The S&P's rallied since we've been on the show here. It came down 8 points. It's rallied 2 points. So it's still pretty good. I don't know, but I don't understand why TFNN is asking me a question, and I don't understand it. But I'm not going to worry about it. I'll just keep talking, pretending I know what I'm doing, which will not take much effort because I'm very good at pretending. All right. Okay. Oh, I have to tell you one other story. Oh dear. I hope this is really important. This is really important. I have a Nano, a little Apple Nano, where I keep all of my Tony Robbins stuff on, and I keep all of my music. I have 1,000 records on there from Neil Diamond, the Beach Boys, of course, the major artist Elvis. I'll be right back, and I'll tell you the story about Apple computing. Short that stock.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Little rapport on Apple. I have a Nano, and I wanted to save it on my computer so that I have all my Tony Robbins and all my records. And so I called Apple Store to try to get some information. If you want to have a really good, interesting chat, call the Apple Store and let me know what you think. It goes through a routing center, I believe, out of Atlanta. It's impossible to talk to anyone in the store till after they've gone through 20 minutes of their advertisements and how to do all of the apps and stuff. And after a while, I just got so frustrated. I had to wait to finally get to the guy, and I told him that I wanted to look at some stuff. And he says, "Well, we can have an appointment for you on Wednesday at 3:30." And I said to myself, "What?" And he said, "Well, you're welcome to come in the store, but you're going to have to wait about an hour and a half." I said, "Oh dear." I said, the first thing I did was look at the stock of Apple. It says, where can I short it? When I hear stuff like that, it has to scare me to death. Folks, I'm going to end the show going over 3 charts that I think are very important. I just posted them into the Tiger Den. One is the New York Stock Exchange stock index that we showed last week a week or so ago when we gapped down after the new high was made, and then we gapped down on the following Monday. You see that we had the 3 minor rallies that occurred. During those minor rallies, the advanced decline line was dropping like a rock, and it continues to roll over and point down. Means there's more selling of stock than there is buying of stock. It's that simple. The third thing is the fact that the margin debt made an all-time record high on May 29th, 50% higher than it was in October of 2007, and we know what happened in 2007. What will be the trigger this time? I don't know, but my guess is it's going to be quantitative easing. I believe there's going to be another acronym for that, or whatever it is. I'm not smart enough to figure out those advertising slogans, but it's going to be something tricky, and at least it'll sound tricky, much like too big to fail, that type of thing. But something bad is coming out there. These currency markets jumping around like they are, that's real money. It's not funny money like we have going on in these markets. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien.